Today we are joined here by LEAX Group and its CEO Tony Nicol. Welcome, Tony.
Great to be back, Michael.
Yeah, it's great to have you back. So last week you dropped your report for the third quarter of 2023, and we'll take a look at the figures. You're increasing your revenues by 2.7% from last year, landing at 457 million crowns for the third quarter here. EBIT turned negative from previous quarters in Q3 and landed here at minus 12.6 million. If we adjust this for depreciation and amortization as well, the result was positive. However, how do you see the results, Tony? Are you satisfied with the quarter?
Yeah, I think satisfied is, anytime you have a negative number in your profit line, I guess it's tough to be satisfied. I think one thing that I didn't mention in the comments is that Q3 is our seasonally lowest quarter. The Swedish commercial vehicle industry, which is our major market segment, shuts down in July. I guess what I would say is the results are in line with expectations. A little disappointing that we couldn't be on the plus side.
Is it vacations you're referring to here?
Yeah, it's typically we take in the northern part of Europe, there's an extended shutdown period. It coincides with a vacation. Typically the OEs are retooling and doing major changes to the vehicle during that time. That can be a time for a platform update. But definitely vacation is factored into it.
It's a very common theme here when it comes to Q3s. But let's talk a little bit about what was behind these numbers. You talked in the CEO letter about the price increases that sort of drove your revenues. However, it's being mitigated by lower production values, but also on an unfavorable product mix. Can you elaborate?
Yeah, I can elaborate on that. And I think if you look at the 9 months year to date, I think the numbers will actually reflect that. That's kind of been a yearly phenomenon. If we look at production volume year over year, the first 3 quarters of 2022 versus 2023, our production volume is about the same, but our revenue is 10% higher. So that is really the pass-through of inflation, the economics, the pricing that I talk about in the report. Really, is clear in those numbers. We can see that when we look at our production volume being absolutely flat and the revenue being higher. That's revenue with no margin. On the mix side, for sure we see a bit of a change in the mix. I think I mentioned later in the report a little bit about passenger car programs. We see those are down. And more of our commercial vehicle business is a bit higher this year. That's more of our traditional business, and I would say one where the margin profile is a little bit lower than the newer business that we've brought in the other segments that we're targeting.
But if we don't look at the quarter-to-quarter sort of metrics and look at the full picture, then are you satisfied with how things are currently developing?
Yeah, I think so. I think from a strategic perspective, we're hitting all of the milestones that we have for the company in terms of developing new end markets, and also from a strategic perspective, we're trying to drive more content, more engineering content in our products, and I think we've been super successful this year on that.
What more can you say about your current strategic focus?
Yeah, I think those are the 2 pillars of our strategy. So it's diversifying our end markets. We're talking to and supplying what we call general industry markets. We're got a couple really good passenger car customers. We're in the yellow machine sector, the strategy there is really about mitigating risk. If you're serving one industry only, you're at the mercy of their market, which can fluctuate, can be volatile, like any singular end market. So the strategy there is really to diversify, to mitigate the risk. And then on the engineering content side, that's a margin play for us. We want to view ourselves as a solution provider. So going from a build to print company to developing higher engineering content in the products that we sell and our own products. So one of our key strategies was to develop our own propeller shaft, which is a business that we started as a contract manufacturer. We are now selling our own propeller shafts in the market. We're developing a couple new customers along with that product, and we see a much different margin profile on our own developed products.
But let's talk a little bit about personal vehicles then. Your largest client here is ramping down their orders for the third quarter. Could you describe how the relationship is here?
Yeah, I think the relationship is fine. I mean, it's disappointing that a program that's been pretty healthy for us for the past, let's say, 8 consecutive quarters has seen a pretty significant drop. It's entirely related to electric vehicle sales. This is products that are on a full electric platform, and we've seen, kind of globally, a slowdown in EV sales. The sales are there, but they are slowing down. I think the cause of that is a high interest rate environment. The EVs tend to be more expensive than ICE powered vehicles, and interest rates going up 5 and 6% has a real impact on people's wallets. So you see that, and there's a couple other things I think that are playing into the EV sector. The primary one I think is really about range anxiety, and infrastructure, charging infrastructure. These things are not fully in place, as you're aware, and I think the buyers, the people who are really at the forefront of the EV purchase, have purchased those vehicles. It's the rest of us, that have these, everyday challenges, like the size of our wallets and some of these concerns I mentioned that are having an impact on the market.
So it's more overarching challenges for the markets than it's not just client-specific problems that.
Yeah, it's not client-specific, and we're working with the client. We have capacity that we've installed for them. They understand, and we're trying to utilize the capacity. But it is it's a short-term. It's definitely a short-term painful situation for us.
At the latest rate meeting that we had here in Sweden, the Riksbank left the rate unchanged, the interest rate, that is. And some people think that this is the top of the interest rate hike that we have seen, but there is the narrative of higher for longer. Could you elaborate on where you see the market continuing in that sort of climate?
Yeah, I guess as you're fully aware, I'm not an economist, and I'm probably certainly not a subject matter expert on interest rates. I think the consensus, at least here in Sweden, and in fact, I don't think there was a consensus. I think it was kind of 50-50 in terms of the pundits looking at, will there be an increase, another 25 basis points, or holding flat. I think we're all a little relieved that they held the rate where it was. I'm not so sure about is this the end. I think there's the financial markets. There is a lot of volatility in the markets still. We still have some really big issues out there. The Ukraine situation hasn't disappeared. Maybe not as front page as it was with what's now happening in the Middle East. There's a lot of stuff going on out there. So I would concur that higher longer is in the cards for us. But I'm not fully sure that hikes won't continue. And I guess my final thought was, that I was quite happy to see that the Swedish crown, the kroner, did not really take a further dip down. There was a bit of a temporary when they held the rates, and markets and currency traders look for rates to make their plays, and I thought the crown did okay on the hold.
How does the Swedish crown affect your business?
I would say it's had a negative impact, the weakening of the crown over the last, let's say, 24 months. We purchase a lot of goods in euros and sell a lot of those goods in SEK. So in that case, it's kind of had a negative margin impact on us. But on the other hand, things that we are buying in crowns and exporting, everything has got a little bit cheaper, but I think the net has been a bit of a negative impact for us.
You're doing a couple of changes as well in your management. Executive Vice President, CFO, and Vice President Procurement has changed. Talk to us about this.
Yeah, let me talk about the procurement or purchasing role. That is actually a promotion, really, I'll say a long overdue promotion. So somebody who's been with us for 20 years, an absolute key member of the team. In this case here, I think that for me personally, Michael, it's if you look at our business being a 2 billion SEK turnover business, assume that 50% of that turnover is the things that we buy. So in terms of the dials and levers that we have in the company, that is a real opportunity. And this promotion represents the importance of that role in the company, and that's why there's a seat at my table for that role. So I created a new role in this case. For the VP CFO role, this is a bit of a change for us, and we have an outgoing CFO who built an incredibly strong team. So in terms of the X's and O's of accounting and compliance and controlling and treasury, the real finance functions, we have a super strong team. And so we saw this as an opportunity to really augment the business. So the CFO that we're bringing in has a dual title as Vice President and CFO, and the person who's joining our team has a load of operational experience. So in our minds, and as we continue to grow and face the challenges that we have, the person stepping into that role has really the role's been designed to be more of a right hand to the business and less about the pure finance functions.
The IPO pipeline here in Sweden has seen some action, amongst others, Rusta. Could you tell us what the current situation is in your IPO thoughts?
Yeah, I think I'll say like the Bank of Sweden, it's an on hold process right now. We're not in a hurry to go to the market. I still think there is a lot of volatility, and I'm not sure how healthy the IPO market really is. But when we brought AMF on board, last spring, that was, whilst not being an IPO, it was an equity raise for the company. It certainly put us in a healthier position in terms of our balance sheet and allowing us to continue to grow. So I think my message to you is, watch these pages, and when we're ready, you'll be one of the first to know.
All right. The LEAX CEO, Tony Nicol, thank you very much for being here and answering my questions.
My pleasure.